Hello friends, there's a $300 gap on the CME chart, but let's just ignore that for now and talk about how the prices have been going up. They've been going up and they've been going up and they've been going up. And we can just tune in here with the 2-day time frame. I think there's quite an interesting couple of patterns on there and potential breakouts from things that we can look at, all kind of encapsulated right there in the 2-day time frame. And we also have this box here in the background with a series of numbers in it, and we can give ourselves a wee congratulations on having written this box out. But to do all of that sort of stuff justice, I'm going to have to put my rainbows and unicorns frame on here just to talk about things over at 10.342. In fact, if it's that price, I can go right down to the 1 minute time frame to point this one out. Yes, this is the FOMO coaster. There's only ever upside on this FOMO coaster. Any relationship or any association you may have with a roller coaster is completely coincidental, and there's absolutely nothing to ever be worried about because there's nothing possibly ever that could ever possibly ever go wrong, as you can tell here with this rainbows unicorns frame on and the use of the word FOMO coaster, which of course only ever goes up and never ever ever goes down. Just a little reminder to people there. Yeah, let's get back into the real world for a second here. Just into the real world. Give me a second. Aha, that's better. Right, so what have we got written out here? Well, there are a few upside targets that we can totally look towards, and we're going to take a look at that here as part of this episode, and a couple of things that we should be aware of. You know, as I say so often, when things go, when people board the FOMO coaster with their 100x tickets, they often forget just how dynamic the price actually can be. So let's kind of look at a few different things here and put this all into context. I think the 2-day time frame is really quite interesting. We can start off, I suppose, by taking a look at what the realistic measured look at a move outside of this ascending triangle would be and where that could take us towards the top side. Now, how did I get this measuring stick? I took it from over here, looking at the ascending triangle that's in the background, and I suppose we could put this into context over here by saying, like, if this was your measuring stick from this thing, the descending triangle that's in the foreground, and then we broke out of it here, you can see that we've had the full measured move off the back of this one. Okay, if you were to have just done it the full way. But if you were to have done it the sort of the textbooky type way and gone for these in between areas, first off, like we had written out on our price, you know, our price targets list, this is just one of them that we've spoken about many times in the past, then you can actually see, looking here at the 2-day time frame quite clearly. Maybe you can't on your Wii mobile phone screens or whatever, but just you'll have known yourself from over the last few days that we came up here towards these targets, then down again towards the zones where you'd want to see support coming in at, like this white sloping downward line here, and the blue serrated 9555 area, then move towards the top side and all the rest of it. So I could have kept the rainbow unicorn frame on there for this one and said, this is the technical analysis, you know, telling you exact entries and exits, and laying the whole thing out, a roadmap for you so that you can trade this and do it successfully. I could have just left the rainbow unicorn thing on for that. It isn't always quite like that. Let's take a look at a couple of mitigating factors first off before we get too wild. But just to put just because I was looking for that context of the pattern thing here, we did the full measured move, like I was saying, off the back of this pattern, and that's where we're at right now. So in one sense, that's kind of your most, like, that's one kind of bearish type thing. We could, I suppose, take a tally of things which are like bearish and bullish along the way. Bear box. Let's do it this way, shall we? Bear box. All right, and we'll stick the bear box on the left. Right. Okay. I could be more graceful about this. I'll just leave it thin like that for now. Great. Okie dokie. And bull box over here on the right. And we'll make this right in green. No, we'll make this border green. Yeah, border green. So there we go. Right, great. Okay, great. So bull box and bear box. And the bull box side of things is that we have a potential, you know, if you were to go for the full measuring stick, sort of proper FOMO coaster YouTube style, then you'd be looking at going up towards roughly, say, let's just call it 11,500. So full measuring stick FOMO goes to 11.5k, and that's kind of interesting because there's other stuff to talk about there, so we'll get on to that in a moment or two, something to do with that 11,500 area, which you'll probably be able to guess yourself, but we'll leave it there for now. Bear box, on the other hand, is that we've had the full measured move of the triangle, descending triangle. Okay, dokie. So there's our sort of our one each at the minute there in that one. Okay, so we've got this. So where would this take us to though? If we were to just to get the sort of the Bulkowski textbook style 50% sort of ish type move or whatever, and 50 to 60% of that move, well, the measuring stick was like this before, kind of messed it up, and halfway of it round about there looks in around about this area where it's 10,700 or so. So we could still be looking, of course, up as high as sort of 10,700 area for the next sort of FOMO free. We'll call it FOMO free measuring stick. FOMO free measuring stick takes us to 10.7k on AT. Oh shit! So, excuse my language. What on AT? Right. So if we're going to call it that, now I don't think that that's necessarily a fair name for it. We'll call it reduced FOMO, because it's not FOMO free. Because you know what? When they take all of something out of something, they always put something else in. So it's like those fat-free things, but it's still got loads of sugar in there, you see? So it's, and that gets turned to fat in your body anyway, so it adds up to the same thing. So reduced FOMO, we'll call it instead. Great. Or half and half, or something like that. So okay, cool. We can continue doing this. I suppose we can continue doing this for days and days. Actually, in all the videos, so I won't feel compelled to necessarily fill these all out at the minute. But we can revisit the 2-day time frame and write stuff in there on them as we come across them. Let's just take another look at this white line. Then, what was this white line that we came up and I said we retouched it here on the 2-day time frame as we were going past, and this is on the weekly time frame. You can see is where we drew this in at, and it denotes the upper end of this potential sort of descending broadening wedge, which was like the bullish continuation pattern, you could say. And we're perhaps breaking out of that now, but if we ignore the bottom line, just ignore the bottom line, ignore it. Let me see, if I zoom in enough, you can kind of ignore it. So if we ignore the bottom line, just say, what is this area here that we're looking at then? Well, this was this symmetrical triangle that we could have potentially broken out of. And if we take a measuring stick off of this thing and go the full way up, then where does that take us to? Well, a breakout from that takes us all the way up to that 11,000 area there. And if we were to do sort of half and half, the reduced fat type one, then we're actually beyond that currently at the minute. So you suppose you could say, you could put that either way, you know, that we've had a potential breakout from this symmetrical triangle of this, which started here on the 27th of April. And we've already had like the full measured move off of that for the textbook style. And then there's the YouTube style full measured move. And that takes us up as far as 11,000 or so. So we could put that in the boxes if we wanted to as well. So I suppose, where are those boxes at? So we've had full measured, what we call it, FMU of S, small s triangle, symmetrical triangle on weekly. Reduced FOMO, RF, reduced FOMO, and on this one here, the full FOMO measured move is still got a ways to go. 11k. Okay, great, right? Nice one. Okay, so we can continue on again with this. So, what's next then? Well, on the weekly time frame, if we did actually come up here and then want to and see the prices come back down again, what would that constitute? Well, that would constitute a retest of this area having broke outside of it again. And what quite often happens after you have a break outside of a zone is that you retest the areas there for that. And that's a fairly significant move away from where we're at the minute, given the sheer velocity of the move towards the top side in the recent past. Therefore, you could be looking as far down as that 9,550 area if we were to retest this after having had the move up. Okay, so we can talk about retest danger then in those boxes in the bearish box here. So we can say retest danger on weekly of blue serrated line, right? The BSL, the blue serrated line. That's what we're going to have to start calling that. The blue serrated line in there at 9.5k, right? Okie dokie. So there's that retest danger. I suppose I really kind of needed to put in all these have got numbers on them. They're not really qualitative, but I wanted to put in that we've potential break of weekly trend. Potential, I suppose I might as well re-emphasize it as a potential bullish break, even though obviously we're in the bullish box as I write that, but don't want anyone to get confused. Right. Building up a picture here and not doing it in a way that leaves you kind of blinded to what's going on overall, not blinded about it. So there was a few things we also already discussed here, which I think, numerous times that we could also explain again quite quickly here. Like the weekly closes above 10,200 and daily closes above 9,500 are what are needed for us to be able to get properly bullish and whatever else on this sort of chat. Bearing in mind that anything up there under a day or whatever is risky biscuits. Excuse me, just having a wee drink of tea. I'm sure that sounds lovely on the microphone. Sorry about that. So, yes, so what I was saying there was that the weekly closes above 10,200. So if we look towards the weekly time frame over towards the left here, we can see that in at 10,200 in February, we had those highs. So we just borrow that measuring stick that we had floating around here. Then we need to see the weeklies close above this area for us to become, to say, hey, the weekly trend is really different. We have broken the descending triangle line, okay, or descending broadening wedge, whatever. This downward sloping trend line. We've broken above that. Okay, we have, right? But diagonal lines are pretty crap compared to horizontal lines, which I think is fairly well demonstrated when we look at this 2-day time frame descending triangle here, where we broke above it, and perhaps the horizontal lines in this area are maybe more important in terms of inflections than the upward sloping line itself. You break this area, then there's a horizontal line there we had inflection around, and then when we were breaking this area again, we spent a while there kind of staring it in the face. So I would say that the horizontal lines are more important in a way or whatever. So if we're looking here in the weekly time frame, then we can say that what has actually happened here with this is that we came up as high as being able to close up there on Sunday, but we didn't actually achieve it. Instead, the prices retraced back down away, and then it took us into this week where we've come up above it. Now, what could ultimately end up happening, of course, could be that the prices actually end up going back down, and if they do go below 10,200 by Sunday or whatever, then that would be quite bearish. And on a daily time frame perspective, then you're looking up towards 10,500 area. If I just go to the daily time frame, actually, it would be help form that perspective. Yeah, so the same chat there with this, you're looking up towards that 10,500 area. So, there's a few things coming in or around about that which we can be aware of, such as the top end of that parallel channel, if we have one there, in which case, you've never really broken out of any sort of structure from that we've had since May. If that were to then turn around at those areas and go back down the way, then you're still just looking at the same sort of structure. Go down to the 4-hour time frame. I've actually got a parallel channel drawn in there. This yellow one. If I hide the other one, I suppose, just hide that for now. Then you can see just in the terms of this structure, if we move beyond that area, then we can be looking up towards the 10,700, 10,800, maybe even 11,000 area, depending on what sort of time frame that you're looking at that coming in at. But there's a few other things to be aware of, and any move down to below the 10,000 area could then precipitate moves further down as well. Because if we look here at this Fibonacci retracement that I've got drawn on here in the 4-hour time frame, then we know that if they put this in at the current sort of highs area, that's at 10,387. Actually, I have to move it up just a tad. So about there will do. Then we're looking at 10,000 area. That 10,000 round number is the 236 on a retracement off the back of this. So this is actually drawn in from the lows preceding this high. So from this swing low over here on the 27th of June up to this high here in the 28th of July, encompassing the last month of price action. If we do start to go down the way, then you could very easily be looking towards these areas. And of course, the 618 on that comes in right at the bottom end of the parallel channel and is in at $1,000 away from where we are just now at 9,400 or so, 9,350. We've got various things in the past that we've talking about quite a bit there about those areas as well to be aware of. So I suppose I could add all of that chat to the zones, to the boxes. And how would we do that then? Well, we could say that if we were to be moving up above 10,500 on a closing basis, then we maybe could be then looking up towards 11,000 again. You know, that's a decent enough move to be making in terms of trading this thing. Just like we've talked about all these things. You know, that's near enough 5% move. You know, you could be happy enough with that. And so you know that. Or if we actually go back down below 10,000, then we could be looking down towards, you know, easily 9,500 in terms of the two areas to be really kind of paying attention to at the moment, right? With those price targets. So I would even be, you know, tempted to kind of draw in another sort of line here towards towards the 10,000 area. So you can see like this horizontal line here and the interaction that it's had with the prices as well, just to kind of underline that point for us. So I just do that now. Then you can see, you know, as the prices came up here, we extended up above it and then dropped back down again. And then we found resistance there quite strongly thereafter. So this could, if this operates as support, then you could see numerous reasons why it would. And of course, then you'd be preserving that 236 and potentially, you know, opening up the doors for moving up above and re-challenging and around the median line should that happen. And if not, then you're looking down towards the lower areas. So I think that, overall those two things almost make it into our bull and bear box at the minute, I would say. Okay, so the bear box would be saying moves below 10k could speak really like robot cause typing precipitate further moves to the 9.5k area, and I'll put an even sort of less than sign in front of that, right? Of course, though, on the other hand, moves above 10.5k could precipitate moves further. What did I say before? Further moves to the 11k, and put a greater than in front of that. Okie dokie. So that's what we're looking at, right? So I think that kind of more or less sums up that stuff. Now, there is a very, very, very important thing to be taken into consideration as well, and that'll be over here on the CME charts where we have this gap. Now, if we're talking about all these things about how we could revisit this line and what that price point comes in at, in and around about that 9,750 area at the minute is where that line is. If we were to retest this zone, then where would that be taking us down to? And if I just go down to the 24-hour time frame, have I got the lines on? Yeah, I do. So I'll just get that out of the way. We have pardon me, the potential here to be looking at this as being a gap, right? Not the potential, it just is in this area here. I could just draw with another measuring stick down to where it is. This is a gap. It's a $300 gap on the charts, and it needs to be filled out at some point, you'd think, right? And the way that these things tend to operate is that they do tend to get filled. And it's that right there, staring us right in the face, looking at this line here at 9,700 or so, which could easily be sort of around about that that 9.5k area as well. So if we were to continue the bullish trend up the way and have a retracement, which is within the bounds of kind of respected kind of normal areas, say you were to retrace down to the 618 there, it would take you to 9,500, and that would then also fill in this gap here, potentially, providing it happened during CME trading hours during the week, and then also, cause quite a lot of problems for quite a lot of people along the way. If you think about how there'd be a lot of people who have FOMO'd onto the FOMO coaster here, and they could potentially be wiped out should the prices move towards the downside. Okay, I think those are the dangers that we need to be aware of. And if I just want to wrap up, I could finish by saying that that the trend is your friend, and that we've seen this now kind of show us that the trend is our friend. We had our doubts about our friend, but it did actually show us that. But what else do we have? Well, we happen to have a fuzzy line here drawn in on the GBTC charts right in there at that 10.6 area. And what have we seen the prices do? They've gapped specifically from that area right up towards the top. So if we were to come back down and retest this area as support, then thereafter we'd be filling in that gap. And there's a couple other gaps as well to be aware of towards the downside if we were to cascade on past those areas. And you'd be looking at, the 9.6 and the 9.04 area. And if this gap down here were to be filled, then you're looking at over here at the potential for this gap at 7,600 to be filled. Okay, but just to wrap up then on the last sentence that I'll say on this thing is that if we do get those moves towards the top side, then we would have an 11,500 gap up here, being filled in, an 11,700 gap on the CME charts, which is, stood the test of time. It's sat here for almost a whole year on the charts. Just as a reminder that this also could, sit for a whole year without being filled in the same way that one has. So that'll do to help us wrap up the show. If I just dive back over to other charts, I can put the in the bull and bear box, I can mention the two gaps, and no one will be confused because I've talked about these gaps now fairly thoroughly. So there's a couple of gaps on the couple of gaps on the CME and GBTC, right? Do we want numbers? We could say just go for potential for 7.5k. Just there. Just gonna put that in there because we have to acknowledge it. And fairly, and I'd say it's a quite strong chance that the 9.6k, I think it was, gap gets filled. Right, okay, so there's potential for that, and that gap fills. Okay, this one here is also visible. The one we just had, the $300 gap there, is also visible on the weekly time frame. And they do also tend to get filled as well. So right then, looking here, we also have the bullish side gap to say is closest we have been in since last year to filling in the 11.5k gap. Okay, doke. More or less, right? Sound. Okay, I think I've got a lot of value in this episode for people. Of course, I'm not putting a bias on anybody. I am quite clear about everything when I'm talking about stuff, I think. Let me know in the comments down below what you think of this episode and how it worked out for you. Things I haven't talked about, which I should talk about tomorrow, I suppose. I'll put a wee note in here then for tomorrow's show. Tomorrow's show. I'm going to be the moving averages. Sexy indicator, sexy RSI. I should have put the word sexy in. I don't know if YouTube likes it. Hot. Yeah, that's cool. RSI, stock, and DMI. Because what this is that I've gone ahead and just programmed out my own ones here for this. I just did the whole code thing, got the code for the RSI and whatnot, and then edited it to have a couple of things on it the way that I wanted it to work, and using the particular color schemes that I like and whatever else. So we'll be talking about that in the near future whenever I actually use these on the show, which I should have done today. Suppose I could do, if I look at the 24-hour time frame, pointing out bearish divergence there, if you're looking back and contrasting it to the 6th of May. If I look down towards the low time frames, like the 4-hour time frame, then we can see that the Stokes across towards the upside, the RSI towards the upside, everything's going towards the upside without too much divergence here on this point on the RSI. The most recent highs coming in without the divergence on the 4 hour. It is there on the DMI, and the DMI has gone very high in terms of like where you would normally find a pullback from these really high areas. Of course, you want to see it there if you're going to go parabolic as well. In terms of the 1 hour time frame, then you certainly have divergence here on the upper bits, and that you've got it here on the DMI. Maybe we're going to start to see a pullback off the back of that. You never know. We have this kind of broadening, ascending, broadening wedge on that, and we've got a sort of a symmetric. Potential triangle shapes here on this one of some sort, or a wedge of some sort potentially on the stochastics. And as well, what I've done with these things, by the way, is I've color coded them so that they change color in the background depending on the slope of the RSI on that one and on the slope of the moving average on the stochastics. I also just changed it to be an exponential moving average instead of a simple moving average on the stochastics. And then I've made this color coded so in the ADX is below 20, it shows up as red, which is that blue line in the background. So that's kind of cool. So you might want to have them. If you do, let me know in the comments down below and in the Discord and all that sort of stuff, and I'm sure I could share them with you somehow. Thank you so much for tuning in. I'll catch you in the next episode.